Hello, everybody. I'm Jody Samuels, your host today. I began my trading career at JP Morgan, where I traded currencies for 15 years on both Wall Street and Bay Street. Since then, I've dedicated my work to helping traders build structured trading businesses. Today, I'm an independent trader and coach at the FX Trader's Edge, where I trade futures, forex, stocks, and options using our Elliott Wave based framework, the Wavy Tunnel PRO, which I'll be sharing with you today in today's presentation. My topic is spotting Elliott Wave setups with the Wavy Tunnel PRO across global markets. And today I'm going to show you a simple 3-step playbook for identifying these setups across multiple markets. But first, before we begin, I just need to show you a quick disclaimer. Everything I share today is for educational purposes only, and as always, trading involves risk. Just want to share something personal. When I started working at the bank, that's where I learned Elliott Wave analysis, and I never looked back. So I've always used Elliott Wave analysis for my trading analysis, but I developed the Wavy Tunnel PRO strategy to be able to count the waves without really counting the waves, because I never saw myself as a consummate wave counter, although I do love to overlay the Wavy Tunnel PRO strategy on other people's wave counts, like the wonderful wave counts and analysts that you've seen so far today. Over the years, I've come to believe that markets move very much like a pendulum. In my book, The Trader's Pendulum, I describe 3 forces that drive market behavior. First is the market pendulum, which represents price structure and cycles. And second is the financial pendulum, which governs capital, risk, and reward. And third is the emotional pendulum, which reflects fear and greed, the psychology that drives traders to extremes. And Elliott Wave theory is one of the best frameworks we have for understanding how those emotional swings create repeating market patterns. And the question then becomes, how do we turn those patterns into actionable trades? And that's where the Wavy Tunnel framework comes in. And recently, my work has also been recognized in major publications, including USA Today and International Business Times. It's always an honor to be featured in outlets like these, but what matters most to me is helping traders apply these ideas in a practical way. And that's exactly what we're going to focus on today. So what we're going to talk about, I'm going to show you the 5 core Wavy Tunnel PRO setups, how they align with Elliott Wave structure and market psychology, how to spot these setups automatically using the Wavy Tunnel PRO tools to find these opportunities across markets. I'm going to show you live examples of each setup. I'll show you real actionable trades in today's markets, and how to trade with structure, not emotion. So turning Elliott Wave theory into a practical, repeatable strategy. And finally, as we go through these setups today, you'll get a taste of the framework I teach in the upcoming Wavy Tunnel PRO accelerated training, which begins on April 19th. And I'll share a little more about this at the end. But for now, I want to focus on the most important part, showing you how these setups actually work in live markets. What process do I follow to find trades, execute with confidence, and manage risk effectively? Over the years, I've found that consistent trading really comes down to a very simple framework. I call it the 3-step playbook. First, we analyze the market structure using the market map. And that includes Elliott Wave analysis. That's part of the analysis. Second, we apply the strategy. And my chosen strategy is the Wavy Tunnel PRO. And third, we manage the trade for optimal risk and reward. So let me quickly connect the dots between Elliott Wave, Fibonacci, and how we actually trade this structure. the market map for context. Part of building that market context is understanding where we are within the broader Elliott Wave structure. Many of the presenters today are showing their own Elliott Wave counts, brilliant analysis, and that type of analysis can be very helpful in understanding possible market scenarios. In fact, when I worked on the currency desk in New York at JP Morgan, we actually had an Elliottician on the trading desk, and that's where my appetite for Elliott Wave started, who helped us interpret the wave structure of the markets. Now, I was an interbank trader, but that was very, very helpful, and that was the start of my realization that Elliott Wave analysis was how I wanted to develop my trading and then develop my business. And that brings us to the work of Ralph Nelson Elliott. Elliott studied major market indices over a 75-year period in the 1930s, and he discovered that markets move in repeating cycles driven by investor psychology. And then Leonardo Fibonacci from the 12th century introduced the numerical relationships that often appear within those cycles. And we call this, they all stem from the Fibonacci sequence, where each number is the sum of the two previous numbers. And these ratios from the sequence appear in Elliott Wave structures. And when we learn this and recognize this, we begin to see where high probability turning points can occur. And this all shows up in the complete market cycle. I call this the market map, and that's what the Wavy Tunnel Pro is based on. So this is the classic Elliott Wave market cycle where we have 5 waves up and 3 waves down. So this is the impulse move, and this is the correction. And I call this the market map because it helps us visualize where we are in the broader cycle. Now, we learned a lot today about the different corrective patterns. We heard about ending diagonals in the wave C. We heard about flat patterns and extended flats. So that all occurs during the corrective waves. So the corrective waves occur in a wave 2, in a wave 4, and in a wave B on the broader ABC correction. Now, this is a zigzag, of course. But what's really interesting about market moves, Elliott Wave cycles, is that at the end of every swing move, so the wave 1, the wave 2, the wave 3, the wave 4, you see classical technical analysis patterns like head and shoulders formations. And that's just brilliant. So once you learn about all the patterns and begin to see them in the markets over and over again, you can internalize these patterns and kind of know how to trade them. And that's also where the Wavy Tunnel Pro fits in. But here, this is really brilliant because you see the Fibonacci sequence listed here. And this is for wave form, counting the waves and counting the subwaves. So I really love this, and that's why I've based my work on the complete market cycle. So this is the market map. So you can see it's very similar to the complete market cycle. Now, bringing emotions into this and psychology, most investors feel greed at the top of wave 5, where optimism and exuberance are the highest, and they tend to load up, and there's no really seeing that this could happen. We're going up, we're going up, we're going up. Now, I think maybe now, if you've been in the markets for a while, you know what this feels like, and you might not be so apt to be so greedy up here. And because then, after the ABC correction, and it can be very, very strong, as we've experienced over time many times, this is where we see fear and panic when traders feel like bailing. But successful traders learn to reverse that instinct. As Warren Buffett famously said, be fearful when others are greedy and greedy when others are fearful. That's the contrarian view. And one of the analysts mentioned that in 2008, that's when he bought Morgan Stanley at the low of the market. Well, that's a contrarian view. So our goal as traders is to train our brains to recognize when the market is reaching those emotional extremes and almost swap this. So up here, we should be feeling fear, and down here, we should be feeling greed. Now, up to this point, we've been looking at the market map, the complete market cycle described by Elliott Wave. The challenge for traders is that waves are often difficult to see in real time. And what the Wavy Tunnel Pro does is to help visualize that same structure directly on the chart. So this is the Wavy Tunnel setup on the right, and this is the market map on the left. And you can see that the structure is very similar. We have the 5 waves moving up. We have the 5 waves moving up. And then we peak out at point T. We peak out at wave 5. And we have a nice ABC correction down to the tunnel. And very often, as we're going to see with numerous examples, this is where the correction ends, below the tunnel. And that's what our software, we can find these points. And this is where we need to be thinking, okay, what do I need to be buying, to be pulling the trigger? So this is the Wavy Tunnel Pro setup based on the market map. This is obviously an ideal. When we see this ideal setup, this is what we want to trade. So instead of guessing where we are in the cycle, the Wavy Tunnel Pro helps us to see it objectively on the chart. The second step in my playbook is strategy, and a clear strategy helps us to identify the entry point, define the stop loss, set the profit target, know when to trade and when to stay out of the market. And removing the emotions from the decision is key, and that's where the trade plan comes into play. But this is after we understand the market context. Okay? After we done our Elliott Wave analysis, after we look at the market map, we see whether we're in a trend or in a correction, we have a view, and I like to do that once a week. And if I'm day trading, I do it every day on the smaller time frames. So the real advantage of having a structured strategy is that it helps remove the emotion from the decision-making process. And that's exactly what the Wavy Tunnel Pro setups are designed to do. The Wavy Tunnel Pro framework is built on the combination of several powerful market principles. First, Elliott Wave, which helps us understand the rhythm of the market cycles. And then second, Fibonacci, which helps us measure timing and symmetry within those waves. Third, harmonic relationships, which help identify potential price targets. And finally, momentum, which tells us whether a move has strength or is beginning to exhaust. When these elements align, they create the high probability setups we look for with the Wavy Tunnel Pro. And from that framework come the 5 core Wavy Tunnel Pro setups that we use to trade the market. These setups allow us to trade both sides of the market, uptrends, downtrends, reversals, trend continuations, trend reversals. So this brings us to the 5 core Wavy Tunnel Pro setups, which I want to teach you about today. And they're organized around 3 phases of the market cycle. The start of the trend continuation or trend expansion, and the end of the trend or trend reversal. So the first trade is the breakout 1. It's where the trend, it's the trend kickoff, the wave 1. And this is when the wave crosses the tunnel. When I named these trades way back when, probably 15 years ago at this point, I don't remember, maybe longer at this point, I didn't even, it's funny, but I didn't even name them thinking that this could be a wave one, this could be a wave three, this could be the end of the wave four, and this could be the end of the wave five. I didn't even name them for that, but in actual fact, that's what it has become because the breakout one is typically the wave one, the trend kickoff. And then trend expansion, the breakout three, this is riding the wave three momentum. So the breakout three trades, which I'll show you, are riding the wave three momentum. The breakout four trade is one of my favorite setups for stocks, and I'm going to show you that. That's the breakout after a wave two or a wave four. We see that the same pattern shows up in the wave twos. Let me just stick my chat on so I can see if anybody is asking questions. Okay. And then finally, the trend reversal. This is the end of the trend where we have the end of the wave five reversal. And we start with the price to the wave, and I'll show you that. And then the fill the gap, which is the ABC correction completion. So this is simple, visual, rules-based, designed for clarity and repeatable execution. So now let me show you what these setups look like on real charts. And what I'm going to do is, as I show you the setups, and I came up with these setups last night, so it's relatively recent data except for a few slides. I'm going to also show you the wave counts that go along with it, which we can use for our confirmation. So that means that if you have wave counts that you're following from somebody and you overlay the wavy tunnel on it, you can just, it just gives confirmation. Traders need confirmation. Like is this really going to play out the way it is? Do I have something else to look at that can confirm this trade? I know I ask myself that question all the time. So my way of showing you how to confirm is to, I'm going to use Wave Basis software, which automatically does the wave counts. And Stephen is going to be speaking next to show his Wave Basis software. So these are the 5 core setups that we talked about, and this is what it looks like on the chart. And this is a beautiful chart with our blue dots, our semaphores. The purple is the highest swing move. The gray is the next level swing move. This is the market map. I'll tell you what the moving averages are because you can set the moving averages up on your charts. The green is the 12 EMA. The purple lines are the 34 on the EMAs on the high, low, and close. And then the tunnel is the 144 and the 169. Okay, so you can do that. You can set it up on your charts and you can see the structure. You won't get the semaphores. That's proprietary, and that's what you'll get when you join the training. So the breakout one is when the wave crosses the tunnel. My definition of an uptrend is when the wave is above the tunnel. Like that's what it is. So even if we are in this kind of a correction, let's say this is the bigger time frame, this is the daily. Oh, this happens to be Morgan Stanley. Funny. Okay. Just because we have a deeper correction, we're still in an uptrend. We're just in a correction of the uptrend, and we could see that on the weekly chart. So my definition is we're in an uptrend if the wave is above the tunnel. However, when the wave is separating from the tunnel, this is where the trend moves take place, and you want to be buying into the wave because the wave is still moving up. And this is your end of the trend move. And this is your price to wave and then fill the gap. So this is your deep, deep correction to below the tunnel. And then we start with the breakout 4. So trend expansion, breakout 3 is during the trend move. Breakout 4 is after we have that significant correction down to below the tunnel. And this is really great to know because if you are in here and start buying because you think the correction is over, it really helps to have this kind of structure in place, the Wavy Tunnel Pro, to show you, no, we're going to go lower. Even if you don't necessarily think that at the outset, we most likely will go lower. And I'll show you numerous examples to show that. Okay, let's start with the price to wave and the fill the gap and some of the things to look at to spot the end of the trend reversals. And I do see a question. If you do have questions, I will attempt to answer them as we go along. And I will show the schedule again maybe after I speak. And one of the questions is, are some stocks suited better to the core setups than others? Does it work better on sectors? And my answer is it works on all asset classes, all stocks, all sectors, ETFs, and I'll try to show you some examples. So this is a daily chart. Now this is from our dashboard scanner. And the dashboard scanner is an end of day scanner. So this is a daily chart. Now, the price to wave fill the gap. Let's start on the left side of the chart and just talk our way through it. When we move up, when the wave is separating from the tunnel and we move up, at this point, we're going to get a purple diamond up here because we haven't made a new high yet. So we're going to get a purple diamond. And the Wavy Tunnel Pro says, okay, if we get a purple diamond and we start to break down below the wave, we're most likely going to go below the tunnel before moving up again. And that's exactly what happened. We moved down below the tunnel. And what you see before that happens is you can see the market running out of steam. You see divergence. This is the awesome oscillator. So price makes a new high. The awesome oscillator makes a lower high. So you get divergence. Then you have the major sell-off, and this is what I call that the next time to break that 4 trade. But this is the PW fill the gap. Then we move up again. We make a new high. We have divergence again. And when you have markets that are moving up, you're going to see this pattern repeatedly. And you're going to see the pattern on the weekly charts as well. You're going to see the pattern on the shorter term charts as well. You're going to see the pattern because these patterns repeat over and over again. The markets are fractal. So this is divergence again. We have a very strong peak in the awesome oscillator and then a lower peak. That's divergence again. And then what are we expecting? A move back down to the tunnel. So this is how one of the things that we look for when we are identifying the exhaustion point, okay, when the market has run out of steam. Now I'm going to show you the wave basis charts with the wave counts and to show you how it's labeled. Now I didn't change the wave counts. I just had it come up with the wave counts. And I know that the peak was up here, the initial peak with the purple that changed to gray. So this is a wave 3 peak. And then we move down, and this is the wave 4. So I started out by telling you that these moves down occur at the end of the wave 4s, at the end of the wave 2s, because those are the corrective waves in this sequence. And I don't need to know what they are. But when I pull this wave count up, it's nice to see that it confirms what I'm saying on the Wavy Tunnel Pro chart. And then we move up again. And I don't know if this is the correct wave count. I have no idea. I'm just looking for market turning points, for swing points. And I wanted to confirm what I'm seeing in the Wavy Tunnel Pro charts. So we got the purple semaphore up here. I put the awesome oscillator on so you can see the divergence. And then we come down in a nice ABC fashion to below the tunnel. And it's labeled as a 2 question mark, right? So that's good for me. I'm seeing the end of the swing move because my indicators are saying it's likely the end of the swing moves, and I'm confirming it with some wave counts. So now let's look at the PW fill the gap case studies for bullish and bearish. So on the left, we have a downtrend. This is clearly a downtrend, and we have divergence between this low and this low. We made new lows, and the awesome oscillator made a higher low, the higher peak. And then we started to move up again. And on the right, we have a bearish PW fill the gap, so the market top, and then we move down again. So at this, so let's just talk about the PW fill the gap. Now let's just show this with the wave counts. So we have the wavy tunnel on the left, and we have the wave counts on the right. So what I'm looking for, if I'm looking to buy down here, and knowing that it could very well be counter trend because we have been in a downtrend, then I'm looking for the end of something. And this is the end of the C wave, the end of the C wave. Okay. So of wave one, it's saying. So I'm not saying that the wave count is correct, but I know that even after, if it is a wave one and we are going much lower, I know that we're at least going to have a correction, most likely to above the tunnel. And that's all I'm looking for. That's all I'm looking for, because I know that this is counter trend. Now, the next one is Masco Corp. So on the right, we have the wavy tunnel. We have market highs. And let's see where we are. Let's see what the market context says. So this says that it's the end of a wave 3. Okay, orange 3. And so with that, great. I know that if that wave count is correct, and it's saying so by my indicators as well, we have divergence, and we have a bunch of other stuff that we look at, which you will learn in the training, that we can move down to below the tunnel. Okay. So that's the PW fill the gap trade. Price to wave, fill the gap. So my message here is, if you think that the correction has finished down here, no matter what instrument you're looking at, and then we start to move higher, this is the bull bee trap, because most likely it's going to roll over and go below the tunnel. And you got to recognize this pattern. If it doesn't, then it's just a very, very bullish market with a shallow correction. But the way you can tell is if we do roll over and start to go below the wave again. So now let's talk about the breakout 4, riding the wave 5 for explosive moves or not. Like it doesn't have to be an explosive move. So this is Apple. And here we have the divergence, the market moving higher. We have triple divergence here. So the PW fill the gap completes at the tunnel where the breakout 4 takes over. So this is spotting the end of this move and anticipating a wave 5 move or a deeper correction. Okay, not necessarily true that it's going to be a blast off move. So many of you, if you were trading Apple, and a lot of people trade Apple, you might have thought, okay, here we're starting to move up again. We're going to be making new highs. It could have happened. But once we start to break down below the wave, no, we're going here. We're going below here. So now let's look at the wave count and see these swing point moves. So this wave count I took last night, and I didn't mess with the wave count. I just literally, I didn't have time. I just got the wave count and I said, yeah, this is coincides with my Wavy Tunnel PRO structure, and I would just print it out and put it in the presentation. So I'm not changing the wave counts. You'll learn more about the software when Stephen speaks next. So this is calling it the end of a wave 1. That's the end of a swing move, looking for a wave 2 correction. Now here, okay, it's saying that this point where we got the gray semaphore for the breakout 4 trade was the end of an A wave. So we know with Elliott wave analysis that if we do move up in 3 waves, that we can have a more complex correction and we could move down for a C wave. We don't know, but at least you're going to get the bounce. You're going to get the bounce from this level. Okay. So just as we have breakout 4s for uptrends, we also have them for downtrends. And this is the bullish PW fill the gap. And because we've been in a bearish trend, so the question is, are we going to continue down and make a new low? And that's always the question. Or are we going to correct this move and then start to move back up again? And that's always the question for me. So with the wavy tunnel, you can take your profits up here. I personally don't. I like to find buys rather than sell, so I wouldn't be selling here. Um, but you do know that once the wave crosses back above the tunnel, it's likely that this corrective move is going to be finished and that this can morph into the next swing move up for a breakout one. Not saying that it's going to, we don't know at this point that it's going to do that. And then on the right, here we have the breakout 4 buy, and we saw this before for a move back up again. And by the same token, if the wave starts to come down below the tunnel, we're not interested in being long and looking for this setup. So looking at the wave count for APTV, this is the end of the wave A. So this is saying, okay, we are potentially going to move back up again. But at the end of an A wave, we are always going to have a B wave. So even if you see this structure and you want to buy a put or whatever, this is what you can expect at a minimum. And Masco, so we're looking at the breakout 4. So again, this is the end of the A wave. So minimum, you're going to expect a B wave up. The way this is labeled is an ABC, so pretty choppy. Okay. So let's look at some ETF case studies, and there are some, I'm just looking at questions too. I'm not sure I understand that question. Okay, maybe you can rephrase it. ETF case studies, the SPY. Okay, I did take this last week. This print came last week. So this is the PW fill the gap. We have divergence. You can see the divergence. And then our target is the tunnel. Okay, let's look at the wave count. And okay, the wave count, this is the end of an impulsive move. And then we have a nice move down into below the tunnel, labeled as an A wave. Okay, so as an A wave. So what that means to me is that, okay, even if we trade up and not make new highs right away, it's okay. We're still going to get a bounce. And we did get a bounce. Okay. This is the QQQ. We got the same pattern. Now, what's interesting here is we did have multiple divergences from here all the way up to here, starting from this peak. You have to start from the previous peak. And then we had the way these colors work. Purple is the biggest swing move, followed by gray, followed by yellow, and then red and blue. So here we have a nice 3-wave move down into the tunnel. Initially, we had a 3-wave move down into this. So this is a flat into the gap between the wave and the tunnel. So it wasn't quite complete. It just wasn't quite complete. And then we had a very sloppy move up for a wave B, a corrective wave move up for a wave B. And I'm not counting the internal waves. Like that's what the Elliott Wave analysts do. I'm not counting. I can see the patterns. I can see the different, obviously I teach Elliott Wave analysis in the accelerated training because it's very important to understand how to count the waves without being a consummate wave counter necessarily. And then we come down. What I'm looking for is I'm looking for the gray. I'm looking for the gray diamond. Okay, that's what I'm looking for. And we got it. So now let's look at the wave count. So wave basis is labeling this the end of a wave 1. And look at this, the end of a wave 2. Okay. And then an A, B, And what happens after a wave B? A wave C up. All right. So this is really the point where we got the gray semaphore. Now I'm going to take you, I'm going to show you some older case studies, and this is before the stock split, XLK, to show you how we can look at all the different time frames and see the patterns on the smaller time frames. These are from wealth charts. So XLK. So originally we had the purple semaphore. It's a triangle up here. We had a purple semaphore up here, and then it changed to gray once we made a new high. So the initial move down into the wave, and then move down to the tunnel. So this is a purple, yellow, yellow, gray. Purple, A, B, C, gray. And this is the price to wave, and then fill the gap. And this is the breakout 4 trade. Once we get the completion of this move down into the tunnel, that's where we want to consider buying. And that's where we use wave counts, or we use whatever else we use to determine whether we're going to be buying or not. I mean, it's important, like if you're trading all the sectors, to know what's hot, what's not. I mean, you learned a lot about that today, to maybe focus on the markets that that the market is rotating into. I mean, there are other things that you can do. I'm just teaching you a small piece of it. So this is the breakout 4 trade. Now, some of you are probably asking, why didn't we have divergence up here? Well, sometimes we don't get divergence. This was a very, very strong, steep move, and we got a peak in the awesome oscillator. So we do have bar divergence. This is called bar divergence between this high and this high. So we did have the histogram flattening out, moving lower, red histogram bars moving down. So you had some divergence up there. And then, of course, you have this major divergence up here, okay, from this high to this higher high and divergence. And this is the XLY on the 60-minute before the stock split. So same pattern. We get the purple semaphore, we get the move down into the below the tunnel. So you get the gray. And then you look for your confirmations to be buying the market. A lot of you some of you probably trade futures markets. If you trade futures markets, this is the NQ, the 5-minute. You get these patterns in the futures markets as well. And this is, again, this is an old chart, but I'm going to show you some more recent charts shortly. So again, you get the separation of the wave from the tunnel. This is your buying zone. And then you get the correction. And this is your breakout 4 trade. I mean, this is the 5-minute chart. So if you're trading futures and you're seeing these patterns, like after we have major sell-offs, and you get this, you don't want to necessarily be selling. Now, there's a lot more that goes into trading futures. Granted, I do look at other things, like I look at the overnight ranges, very important. But when you see that we have sold off into major support, and you get the gray, and then you get a 1, 2, 3 reversal, for example. I mean, this is very telling that we could be moving up again. And then we do move up and we get divergence. This is massive divergence, and then we come down again. So the PW fill the gap trade. Okay. This is a range day, but playing the market cycles over and over again. Here's the ES 1-minute. So this is a 1-minute chart. Same thing. You want to spot the end of the wave 4 or the wave 2, which is here. And then look what happens. We move up and we get the purple semaphore. Anticipate the wave 5. So these patterns occur over and over again because the markets are fractal. Gold. The 1 minute, same thing. Okay. Move down. Price to wave, fill the gap. And then the market reluctantly moves higher on this day. Okay, this is a while ago. Like I said, it's at the end of last year. Okay, and then this is a 15-minute chart. So same story. Okay, just the patterns. The patterns are going to repeat themselves. Now this I took last night. This is the 4-hour gold chart, and here we have divergence. Okay, so you have an initial. This is when we had the peak, and then we had the major sell-off, and we had the major sell-off. Oh, can you still hear me? Yeah, I think I'm okay, right? We had the major sell-off, and we got the gray below the tunnel, and then we started to move up again. And now this is interesting because gold, this is the 4-hour. We typically, when we find a high and then we need to consolidate for a while, we go between green, the grays. So we had this major sell-off, and then we moved up, and we couldn't quite make a new high, and then we came down again for the breakout 4. Now let's look at the wave count. So this was the peak. Let me just make sure that right. So we're looking at the end of this move, is labeling it as the end of a wave 1, and then ABC for the end of a wave 2. Okay, and this is where we are right now on the 4-hour chart with the gray. That's not to say that it can't go lower, but this is just our best, our best analysis right now. Now I'm noticing that the wave is in the tunnel and it's starting to go below the tunnel. So if it goes below the tunnel, then it means that we're going to go lower. So that's what you have to watch for. Now, these are all of the platforms that we're on. I'm going to show you some my breakout 4 trades on stocks from the dashboard scanner. I'm going to show you the scan and look at 3 charts in just a minute, but and look at all of the, the list of setups that have the breakout 4 buy setup. But we do have the indicator suite and scanners on MetaTrader 4, on NinjaTrader, on MotiveWave, on TradeStation. We have the indicator suite on Wealth Charts and TradingView. But this is our newest product, Wavy Tunnel Pro Dashboard Scanner, with almost 5,000 instruments. So let's start with the MetaTrader 4. This was from last night. And this is the euro on the 30-minute. So on this software, on the MT4, we also get automatic trend lines. So usually they're removed from the chart once the profit target is hit, but I just kept them on so you can see. So this is a red trend line, for example, that look at this setup. This is your PW and then your fill the gap. So we had that with the trend line break right here. This automatically shows up on the charts. Okay, we had our divergence and we had a trend line break, and this is the target. We have programmed targets into this software. And where was the target? At the tunnel. Okay, now we did move higher and we got the gray semaphore. The gray semaphore was over here initially, and then it moved up. Okay, it repainted. And sometimes it does that, and because I also like to see the I'm not sure if this repainted. It might not have repainted. No, it might not have. I like to see price going beyond the tunnel. And then once we got the gray semaphore, we got a few other trend line breaks. These are automatic. And the price targets are different for the different trend lines. So we got this trend line target, and yeah, for the magenta line. And I think we got the blue target as well, but I think it's underneath the magenta arrow. So let's look at the wave count now. So the question here for the euro is this a correction up, and are we going to continue the trend down for the euro, or is the wave going to cross the tunnel moving higher, and are we going to start to move higher? So wave basis software is calling this the end of a wave 3, and then we move up for a wave 4, looking for a move down. Now, yeah, I don't know. I mean, really what I would use this for is great. We're looking for at least a move down, and I would look at my trend line breaks as well and look for some of those targets. Would I stay short the euro all the way down to make new lows? No, probably not. But I know that we're going to have a move down after we see this peak. Here's an example on NinjaTrader. This is the ES, and is the ES? Yeah. And what time frame is this? The 1 hour. Okay. So here we have the purple semaphore, and then we have some sideways consolidation. We have the gray here, and what is this? The breakout 4 trade. So on this software, it spits out the red arrow, and these are the price targets. It's just a Fibonacci retracement from the low to the high, and you could set it however you want. You can make it more aggressive or less aggressive. But we hit all the targets because this is where we went to. So now we're looking at, okay, we have our trend lines, our automatic trend lines. And this is interesting because we have an automatic trend line to break out and then an automatic trend line to break down. And you learn how to use these. I'm not going to get into it right now. But let's look at the wave count. So this was where we saw the gray semaphore. If we just go back up, right over here. And this is very interesting because this is the end of a swing move. And then we're expecting a move up. So you can use this with wave counts, and you can use this with the Wavy Tunnel Pro strategy. You can confirm the moves. You're going to learn all about these setups in the program. And this is Trading View. This is an old chart just on the 5-minute. This is Apple on the 5-minute. So again, we had the move down into the tunnel. So this is our dashboard scanner. And all of these trades are set up for found the breakout 4 trades, which is in this column. Across the top are all of our trades. You can scan for a lot of different stuff here, whether it's optionable, trend, what's the daily trend, the weekly trend, the PW trades, the fill the gap trades. I'm going to focus on the breakout 4 daily trade. Okay, that's what I want to show you. I'm going to show you 3 examples. Now these, I printed this out last night. Okay, so it's pretty hot off the press. It is hot off the press. So we're going to look at AMD, Baidu, and Dollar Tree. Okay. So the first one is AMD, and this is what it's scanning for. Okay, the gray diamond. This is on our dashboard scanner, the breakout 4 trade. So we got the purple, we got the yellow, the ABC correction. And I don't really look at what's within. I could count what's within, but that's what your wonderful analysts are for. I'm not that person. I'm not a wave counter. I know how to count the waves, but I'm not interested. I'm interested in trading them. So here we go. We got the gray. So I'm interested in saying, okay, am I going to buy this here or not? Really, that's my question. So now let's look at the wave count. And I see, interesting. Wave 1, A, B, C, right below the tunnel. Interesting for a wave 2. Looks pretty solid, doesn't it? Looks pretty solid. The next one is okay, that was AMD. The next one is Baidu. again, this is the daily chart. So we get the purple, we get a move down. This is like a very quick move down, A, B, C, right to below the tunnel. So my question is, am I interested in buying this? So now let's look at the wave count. So the wave count, and remember, I'm looking for a wave 2 or a wave 4 down here. Wave count suggests that we had a wave 3 top, we had an ABC move for a wave 4, and this could be potentially the start of a move up. I like it. I like it. And I'm counting that myself as I'm looking at the Wavy Tunnel Pro pattern. This is what I'm seeing. What I don't know is, I know that it's the end of a swing move. I don't know which move it is, and but I know that that's where I want to be looking to buy. Here's Dollar Tree. We had a nice ABC move down into the tunnel. And let's look at the wave count. Wave 1, wave 2. So that makes me very happy. Okay? It's like a confirming, it confirms that, okay, maybe this is something that I'm interested in buying. Okay? So let's summarize. Let's summarize the trades that we learned today. The Wavy Tunnel Pro focuses on 5 core setups that correspond to different phases of the market cycle. We learned about the breakout 1 trade, which is the start of a new trend when the wave crosses the tunnel, and the breakout 3 trade. This is your wave 3 momentum with strong trend expansion. We showed that. The breakout 4 trade is after an ABC wave 2 or a wave 4 because we're not sure which one. And that's a breakout towards a wave 5 or a wave 3 if it's a wave 2. We're not going to jump from 2 to 5. And then we have the end of the trend. So the end of the wave 5, the end of wave C, the end of something. PW, price to wave, that's our wave 5 reversal, where price returns to the wave for a bounce or a reversal. And then the fill the gap is a deeper ABC correction, where the market fills the gap to the tunnel. So this is a summary of the 5 core setups that I've taught you today. And let's just look at this chart just to summarize again. So the gray arrow shows where the trend begins. Okay, it's the start of the trend. This is the breakout 4 setup. So 1 is right here, 1 is right here. The blue and red dots are the wave 3 expansion trades, dots into the wave. You want to be buying until we get this. And then the purple arrow, 3, is the end of the swing. So the price to wave, fill the gap, reversal starts here. And this is it. This is the setup, simple. Okay. So I want to just tell you a little bit about the Wavy Tunnel Pro program coming up. You've seen the framework, the market map, the setups, and how they appear in real markets. But learning to trade these setups consistently requires a structured training process. And that's exactly what we teach in the Wavy Tunnel Pro accelerated training. Okay. Clear roadmap of the market cycles, a structured strategy for the setups, rules for entry, stops, and targets, practice applying the setups on real charts, and depending on what you trade, how to trade your different markets in different time frames, because not everybody is going to be a swing trader or a day trader. Everybody's different. So I encourage you to join the Wavy Tunnel Pro 5-day accelerated training and mentorship program with me. It starts April 19th. This is my flagship trading program, and this is my personal system, which I've shown you today to achieve your goals in any market. Okay, so I follow very specific criteria to evaluate every trade setup. And this is and when you do that, it removes subjectivity from the decision process. And the greater the objectivity, the fewer the emotions. One of the things traders tell me most often is that they finally found a strategy with clear rules. So this is a testimonial. The Wavy Tunnel Pro strategy has what I've always been looking for: clear, defined, understandable rules that are consistent and easy to follow. Even people with no prior market experience can learn these strategies quickly. The Wavy Tunnel Pro system works across all asset classes and across all time frames. It's for experienced traders looking to improve consistency, as well as new traders looking for a clear trading roadmap. It's for traders across all markets: Forex, futures, stocks, options, cryptocurrencies, and all time frames. Okay. The Wavy Tunnel Pro accelerated training includes 5-day accelerated training, complete Wavy Tunnel Pro strategy and course manual, Elliott Wave and Fibonacci framework, real chart trade examples, and unlimited access to training. Some of the bonuses: 2 months access to the Wavy Tunnel Pro desk with the Pro, elite tools and scanner. I've shown you that for Forex, stocks, commodities, and crypto. 2 New York trading rooms per week. 2 months access to the Wavy Tunnel Pro dashboard scanner with Pro. One-on-one coaching session with me, and Wavy Tunnel Pro trade analysis mastermind. 11 student trade reviews. So a special bonus for this event: we have also high probability setups. There's a separate course that Neil, who retired in December, he worked with me for many, many, many years, and we're including this high probability trading course in your registration if you register before April 7th. His work is brilliant, just building on the Wavy Tunnel Pro. Plus, you're going to get 3 special guides: a day in the life of a successful stock trader, Forex trader, becoming an entrepreneurial trader, the process. That's from my book. So the real question is this: it isn't about price. Whenever traders consider joining a program like this, they often focus on the price, but the real question is, how long would it take you to figure all this out on your own? And how many mistakes might happen along the way? And how much faster could progress happen if you follow a clear, structured framework? That's exactly why we built the Wavy Tunnel Pro accelerated training. Okay. And this is the pricing. You can go to wavytunnelpro.com and you can read the sales page. We actually have 3 different levels. So just read the sales page and see what you're getting in the course. So today we covered a lot: the market map, Elliott Wave structure, Fibonacci, timing, and the Wavy Tunnel Pro setups. But the real key to consistency is not just understanding these concepts. It's having a clear process to apply them every day. And that's exactly what we teach in the Wavy Tunnel Pro accelerated training. If what you saw today resonated with you, I invite you to take the next step. You can scan the QR code on the screen or go to wavytunnelpro.com to learn more and reserve your seat to the upcoming training starting April 19th. I would love to work with you and help you build the clarity, confidence, and consistency that every trader is looking for. So thank you for being here today, and I hope to see you in the program.